9 a.m. in Hong Kong, Beijing, and here in Singapore, where day 2 of the annual Bloomberg New Economy Forum is underway. You're watching The China Show. I'm Yvonne with David Ingles.
A very good morning to all of you. We are counting down to the open of markets in Greater China. Let's get to your top stories today. Nvidia's revenue outlook topping these lofty expectations out of Wall Street. CEO Jen-Hsun Huang tells us that the company's poised for a strong year ahead.
Sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
U.S. futures are rallying. On the back of that result, we'll bring you more from our exclusive interview with the boss of Nvidia in just a few minutes' time.
Meanwhile, Asian stocks also rising after Nvidia's forecast, even as traders face the prospect of the Fed keeping rates on hold amid the fog in U.S. eco data.
And tensions between the U.S. and China loom over the New Economy Forum, but Singapore Prime Minister Huang says he expects more stable relations.
I'm sure the mutual suspicion and distrust remains, but the guardrails will ensure that the rivalry does not slide into a full decoupling or worse, confrontation and conflicts.
And plenty of great conversations coming up here today. We'll be speaking with the heads of the Singapore Exchange and NASDAQ, as well as Australia's Future Fund and Tokyo Marine Asset Management. Yeah, day 2 here at NEF, but certainly the big focus of markets here today is Nvidia, right? You take a look at how Taiwan is waking up here this morning, and everyone just breathing a whole sigh of relief, Dave. Yeah. What's going on?
The earnings report that's morphed into, quite fittingly, the big macro event across these markets. And speaking of AI, right, it was really a big theme as well in the conversations we've seen and heard and listened to yesterday here at the day 1 of NEF. Of course, we are entering day 2. And I would imagine things like, where do things start to disentangle between the 2 largest economies in the world, and things like AI, for example, that do keep things together, will feature quite prominently as we go into the day 2 today, and of course the session where we're looking at a substantial rally across various assets on the back of those results and also the guidance coming.
Yeah, well, interesting to hear about from Singapore Exchange, right? They just announced this sort of partnership with the NASDAQ about this dual listing sort of regime that they want. Is this sort of a way to compete with Hong Kong, for example, who has been snapping up a lot of tech companies to list in Hong Kong? So certainly that's going to be a really good, interesting interview coming up. Yeah. But you talk about the whole AI story, and even Jen-Hsun Huang talking about the China business, right? So far, when it comes to that outlook, there is nothing coming from China right now and that side of the business, but they continue to re-engage. But certainly that's still going to be that sore spot for Jen-Hsun Huang. Yeah,
and despite that, things are well. So if that sorts itself out, then of course that's an oversimplification of a very complex issue, and that's bonus on top, of course, as we go into today. And I think the point that Yvonne was also making earlier on this entire AI conversation that's taking place, right? You look at, and Singapore Exchange is coming on as well. You look at the markets that are rallying today on the back of Nvidia, right? Taiwan, 3.2%. Japan, 3.5%. Korea's up 2%. Australia, a measly 0.9%. It's the markets where you have a really big representation of tech and AI is really where all the money's going. And that takes us straight into the Asia Fund Manager survey out of the guys at B of A. And what they're saying is you favor the markets that have done very well because of that AI DNA in those markets, like Korea, for example. Yeah, Korea,
I think Taiwan, Japan, as you say, still remain the favorites among fund managers out there. When you take a look at that overweight on China, I think you compare it to now, but maybe a few months ago, that has been reduced to single digits, according to that fund manager survey. So that really is quite telling of where those flows are going to be going to. What does that mean for a place like Singapore, where they actually have seen more delistings than actually listings at the end of last year? Good conversation coming up with the CEO of SGX as well. But yeah, a quick look at what's really happening in the markets here. Let's go to Hong Kong, where our very own Min Min Lo is tracking everything that's going on. Hey, Min Min.
Hey, Hi, Yvonne. Yes, of course, Nvidia is really top of the market story at the moment. And you can see here the Asia-Pacific benchmark up by 1.3%. Nvidia's Jen-Hsun Huang saying that the Blackwell chips demand is off the charts. And also its revenue forecast for Q4 also beating expectations here. You can see TAIEX coming online up 3.2%. The Nikkei as well rallying hard, reversing the losses that we have seen in the last couple of days, right? And it seems like markets are setting aside what we're hearing from the FOMC meeting minutes so far, because the minutes say that many policymakers do not think it's appropriate to cut rates in December, and markets are now pricing in just a 30% chance for a rate cut. And you add to that the government saying that they are no longer releasing the October jobs data as well. So we continue to have that data fog at the moment. We are seeing yields pushing higher. And take a look at the yen. We continue to be pushing higher towards the 157 level, closer and closer to that line of intervention for the BOJ. And it's prompting questions about whether the Japanese government is losing control of the policy mix, especially when you take into account the sell-off in the bonds as well in the Japanese sector. But here you can see some of the chip stocks that we are watching. Advantest up by 8%. TSMC as well up by 4%. These are some of the Nvidia suppliers in Asia. And flip the board as well, we are also watching how we're set up for Asia markets this morning. And we can see the China futures looking in the green this morning, and the yuan also looking unchanged at the moment, still on the stronger end of things at 7.11 per dollar.
All right, Min, thank you. Our China correspondent Min Lo there on the markets here today. But yeah, it looks like really, as Jen-Hsun Huang said it, right? AI is everywhere, everything, all at once right now. And that is lifting a lot of boats here in the region. And earlier we did speak exclusively with the CEO of Nvidia and how Jen-Hsun Huang is really seeing, what the China business is looking like and how he hopes to re-engage with China.
Nvidia's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0. Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
The point there that business is very strong is leading to, as you can see right now on your screens, an extremely strong session for risk assets as Taiwan comes on. And I imagine in 13 minutes time, when Hong Kong comes and the pre-markets start to show up, we're going to get a further boost to these markets. As things stand, Asia-Pacific stocks are on track for the best day in nearly a month or so. Let's bring in Kunjan Sobhani, of course, our Bloomberg Intelligence senior semiconductors analyst, for their take on what's taking place and what was said, how it was said in the context there. Kunjan, thank you so much for joining us. Just your initial take, sir.
Yeah, I mean, fundamentally a very strong beat and raise. When we look at the 4Q outlook, I think it beat even the loftier buy-side bogeys or whispers based on our checks. More impressive was that GB300, which is the Blackwell Ultra, which is their latest generation product with higher ASPs, that grew significantly faster than the overall segment. That suggests that customers' demand continues to be strong, but not only that, that customers want their latest and greatest, more expensive chips from Nvidia.
The outlook for China, I mean, there really isn't much, right? They basically mentioned when it comes to that guidance that they didn't factor in China and the China business anyway. Is that something that we just have to expect for the next few quarters then, Kunjan? And can they continue to deliver despite that China lack of presence?
Yeah, for on the consensus side, consensus is now clean of any China expectations, and I don't think China expectations are coming back anytime soon. And that doesn't pertain a risk for this company. Yes, China is a big opportunity, but since last few quarters, since we have lost that opportunity, which is a 50 billion TAM, Nvidia has added significantly more in its backlog and pipeline, specifically going to that $500 billion number through 25 and 26. And it's adding more deals, as it announced today, the XAI deal for about 0.5 gigawatt and the Anthropic deal for 1 gigawatt. So a lot of these deals by itself, each of these deals can easily replace and overpass the China revenue that they have lost.
Kunjan, you look at the guidance coming through out of the company, whether that's in the earnings call or the interview we did, of course, with Jen-Hsun Huang, and you juxtapose that with the CapEx spend that the rest of the ecosystem have penciled in over the next 12 months or so. Do those numbers jive together? Do they make sense to you?
They do. I mean, if you just look at the CapEx increases for 2026 years versus 1 year back, we have the hyperscale and cloud CapEx by itself has increased close to near 170 to 200 billion dollars. And remember, when he also gave out some math, like when we look at 1 gigawatt data center spending, almost half or more is going in the pockets of Nvidia. So when we reconcile the amount of increased CapEx that estimates have increased for the top hyperscalers, the top cloud providers, and private companies like OpenAI, that does reconcile to the numbers we are looking at for Nvidia revenues.
Kunjan, I have to wonder, just the market reaction that we're seeing here right now. This was sort of a very show me the money sort of moment for Nvidia. It seems like they've been able to deliver, which is quite rare. Most of the time, the markets actually find an excuse to sell.
Yeah.
Does this in some way tame and reduce all the bubble concerns out there when it comes to this whole AI trade? Or do you think it actually maybe increases it, given the fact that there's a lot of questions whether its customers can actually do the same and deliver on results now?
Yeah, exactly. I think it does not fully tame. I think for the time being, this provides sort of a support. It does calm some immediate jitters, seeing that the demand for their products continues to run ahead. I think there will still be questions about getting more clarity, and it's more of a wait and watch game now to see as each of these projects, each of these milestones and deals continue to progress on time and on track.
Kunjan, thank you. Kunjan Samnani there joining us from Bloomberg Intelligence. And certainly going to watch, right? The TAIEX certainly is the one that is really benefiting the most from this Nvidia results here right now. We're up the most since April for the TAIEX right now. Yeah,
the proxy. We'll see in 8 minutes how Hong Kong reacts to, rather positively, of course, when you look at futures right now. Right, just ahead here on shows, we'll be speaking with Asian Society Policy Institute's Jing Qian. And of course, we mentioned this as well, Singapore CEO is joining us here live on sets at the Bloomberg New Economy Forum. 17 minutes to the opening bell in Hong Kong, in Shanghai, and in Shenzhen. You're watching The China Show. Good morning.
Because the two leaders will meet probably 4 times next year, because President Trump has said he would visit China, President Xi will probably visit back, and then there's APAC in Shenzhen and G20 in Miami. So many opportunities for engagement, and it's much needed for stability. The intense competition and rivalry will continue, I'm sure. The mutual suspicion and distrust remains, but the guardrails will ensure that the rivalry does not slide into a full decoupling or worse, confrontation and conflict.
Yeah, that's right. That was the Prime Minister of Singapore there, Lawrence Wong, speaking here at the New Economy Forum on the competition between the U.S. and China. Really quite pointed and quite interesting words and comments from the Prime Minister, right? He talked about, I know you're going to ask me, if Singapore has to choose sides.
That's interesting. Yeah.
But he says, we don't have to in some ways, right? They will do it by issue and what is in Singapore's national interest right now. But as he said, right, obviously the fierce competition is here to stay between the U.S. and China, but at least we had some sort of truce, right? The guardrails are there to at least avoid the two nations from really spiraling into a decoupling. So at least there's that for next year or so.
A predictable competition is one, but it's also relationship on many other fronts.
Yeah.
If you think about it, right? So the next 12 months, I think, the number that stood out to me from that comment that we just played out is that they're set to meet 4 times next year, according to schedule, of course, right? If the trips go to plan and plus the sort of big conferences as well. Well, let's get a sense of what the 12 months ahead actually looks like in terms of the relationship expectations and also where the risks are. Joining us here on set is Jing, co-founder and MD of the Center for China Analysis at the Asia Society Policy Institute. Good morning, sir. How are you?
Thank you, David and Yvonne, for having me. I think it's glad to talk about U.S.-China relationship.
Right.
As you have alluded to, I think decoupling has been proven to be both unachievable and unattainable. I think the good news from Busan is that we have some kind of stability and predictability for the coming 12 months with different milestones that has been built in. April visit by President Trump to China, and President Xi is going to attend G20 in Florida. So both teams is going to look for deliverables to deliver to both leaders to kind of claim victories for both constituencies.
Right.
So we're looking for where will be the areas that both can manage de-risking competition, but also, and more importantly to some extent, is where they can expand cooperation. And here I want to make a case for public health. Like Bloomberg in the opening of this year's New Economy has called out for cancer collaboration, which we've been working on for many years. And I think this is one area US and China should really work together. Put some data on the table. US has about 600,000 deaths to cancer as of 2024. China has 2.4 million deaths to cancer. Globally, it's about 10 million deaths every single year. But US and China accounts for 1/3. It is natural for two of the largest victims of cancer to work together to fight this common enemy of humanity. That's one. Second one is that US is still leading in biotech and in its regulatory framework.
Yeah.
China, on the other hand, has clinical trial infrastructure, but also large amount of patient base. It's also complementary for both to work together to deliver faster and better care and drugs for patients.
Yeah.
And let me add last point. If US and Soviet, can work together during the peak of Cold War to eradicate smallpox, I think US and China should and could work together on cancer. It's really a human issue, not a geopolitical one.
It's interesting. It's not climate. People always say that's the easiest science of
The
where we
lowest
could.
hanging fruit.
But it's interesting you brought up the issue of public health. There's still a lot of structural differences between the two, though, that we have to talk about. When it comes to this whole the trade frictions, is that only going to lead to China to continue to this whole kind of self-sufficiency, tech supremacy sort of regime? Because it seems like, according to the 14th five-year plan, I mean, that is what the priority is right now.
It is so, Yvonne. I think you're right. The stabilization of the bilateral relationship is very much driven by some of the domestic impermanence.
Yes.
One of them is China's 15th five-year plan, as you alluded to. We also saw the rebalancing of different core relationships within Chinese economy. And if we may back up a little bit,
Sure.
we saw some very good performances of the Chinese stock market in the past 12 months. I think A stock went up 20%. Hang Seng stock went up nearly 40%.
Yeah.
And if we go to healthcare again, the biotech index went up nearly 100%. But why is that? Because the Chinese, within their own thinking, has been shifting the gear of the economy as early as September, October of 2024. Partially due to their own domestic challenges of economy, but partially in anticipation of Trump 2.0 and the trade war.
Yeah.
So they are kind of preparing for that, of changing the local incentive for officials, but also having that roundtable in February with private entrepreneurs, including Alibaba,
The big tech
Huawei,
entrepreneurs. Okay.
DeepSeek, because they have realized the private entrepreneurs in China are not only critical for economic development, but also for technological competition on the global stage. Then they also had a March roundtable with international investors. 9 out of the 40 are from, again, health industry. So they want to also redefine the relationship with international investors. So that is all driving the shifting of gear of Chinese economy, partially to deal with the competition with the US.
What's next, do you think, in that re-engagement between the Chinese government and the private sector, specifically the tech sector, where do you think that relationship goes? Because when you look at the economic numbers, for example, a lot of it is, we keep talking about what's the government going to do to stimulate growth. You look at the private side of the investment side, for example, that's not there.
Yeah.
So that seems to be the lacking piece to this, getting the economy reflated again. And core of that is that relationship between the two.
Exactly. I think those balancing acts are currently ongoing. I think the private sectors are not fully convinced this is what this is going to be in the coming 12 months. But they're increasingly aware, given the external pressure from US-China competition and the internal needs of both technological advancement for self-reliance purpose, but also for economic reasons, they are needed more than before. But that social contract hasn't been rewritten yet. It is in the process of being rewritten.
What is still needed then to reinvigorate these animal spirits within the private sector then? What's still needed for them to invest more?
That's a great question. I think a lot of policymakers in Beijing are trying to think. I think the Chinese economy on the outside looks complicated. But if we get to the essence, there's only three key relationships. One is how the party state is going to have incentive structure for its local officials, try to create the kind of de facto property protection and personal protection for the private entrepreneurs. Second is how then the enforcement and implementation of those kind of protections will be put into practice. As you know, local officials and local government are facing a lot of physical challenges, which leads them to get the private entrepreneurs to supplement what they need at local level. And third of all is how China can keep open and engaged with the global market for both technology reasons, but also for the global market. All three relationships needs to be aligned to serve its own purpose.
To the point I think Yvonne brought up, and you just mentioned the next 5-year plan, if they're able to rebalance it successfully, that's actually positive for the relationship. A lot of China's trading partners have been asking China to increase its domestic consumption.
Yeah.
Do you think they have announced enough steps? Is it clear to you that they're going to be able to do that, rebalance the economy towards a more consumption-driven one?
Yes.
Or revive consumption?
I think this is a necessary step for the Chinese government to take. One thing we see from the 15th five-year plan is, first of all, a political determination to put economic development at the center again. That's one political determination. Second is that I think there's a promise to double the income of its people by 2035, which means in the duration of the 15th five-year plan, it needs to reach about 4.2% of annual growth. So it has a strong foundation for the 16th five-year plan, which means with the current model of manufacturing and export-oriented economy, it's not going to be adequate. Hence, to boost up consumption is going to be a necessity. Then the question is how?
Yeah, how?
A couple of things. One is to give the people more disposable income. I'll give you one example. China has about 200 million gig workers currently in the workforce. And a huge part of the disposable income are paid to the Social Security by themselves, which is around 15 to 20% of their income. If there's a way for the government to ask the platform companies to cover part of that 15 to 20% of burden, that will free up huge amount of consumption capacity for those group of people. That will help a lot.
This was fantastic. Yeah. Thank you so much for spending the time. Let's do this again. Of course, next time you're in the region, let us know. Of course, that was Jing Qian, folks, there. Center for China Analysis, co-founder, MD, of course, at Asia Society Policy Institute. As we look at going into the open today, just want to mention two things. Obviously, the market reaction, positive one, we're up 2% on the China CSI is up 1%. We're up about 1% on Hang Seng Tech. This red headline that just crossed, Donald Trump before signing this bill.
So, yes, so this is quite interesting, right? Yeah. So he signed the legislation to compel the DOJ to release files on the Jeffrey Epstein. So approving that measure, of course, Trump has spent months trying to block in this fight that really has inflamed tensions with his own party and really threatened to undermine his agenda. So he signed that legislation, according to that post. That followed a sort of lopsided 421 to 1 vote in the House. There was only one lone Republican lawmaker provided the only no vote, but the Senate also agreed to unanimously send the measure to the president's desk. So there you go.
Yeah.
It is happening.
Yeah. At my direction, the Department of Justice has already turned over close to 50,000 pages of documents to Congress. We'll get you the latest on this once we have more information on this. We're counting down to the open of trade. Just over 3 minutes away, Hong Kong, Shanghai, and Shenzhen. We're looking at a rally, folks. We're looking to gap higher across these markets. You got to thank Nvidia, thank Jen-Hsun Huang. You thank the bulls. The bulls are all out. Good morning to all of you. You're watching The China Show. Good morning, folks. Welcome back. You're watching The China Show, counting down to the open of trades in Greater China. We're live, of course, here out of the Bloomberg New Economy Forum taking place here in Singapore. Day 2 is underway. We'll get to the latest out of the panels taking place right now, and, of course, the understanding of how the world will have to deal with this complex relationship. Thriving in the age of extremes is the theme for this year's forum here.
Yeah, certainly going to be one in focus, but right now, all the focus really has been around Nvidia earnings, right? And really what has lifted risk sentiment once again and really revived a lot of the optimism around AI. Let's get to Min Min, who is watching all the market action.
Yeah, certainly is the relief rally that we're seeing across all the tech-heavy indexes in Asia, right? The likes of the Kospi, the Nikkei, and the TAIEX rallying. And here we can see the CSI 300 also participating in the rally, up about 0.7%. Capricorn up by 2.2% here. CATL as well up about 1%. Of course, the story for China is a little bit different, right? Because the AI players still do not have access to Nvidia's latest chips. And Jen-Hsun Huang himself is saying that his forecast for the China market is still zero, and the company is still lobbying the U.S. government and the Chinese government to hopefully change things there. But let's take a look at how Hong Kong is doing. We are, of course, watching the chips players, some of the AI players, Tencent, Alibaba, Baidu, all catching a bit. Baidu looking at 3.3% gain here. Xiaomi, though, going in the opposite direction. Another tailwind, though, for the Chinese AI players is, of course, the Reuters report saying that the U.S. is considering delaying any implementation of the semiconductor tariff. So that's certainly a tailwind for this sector as well. We're also digesting some of the earnings report coming out overnight. We have Kuaishou, for example, seeing solid beat on earnings, especially coming from its text-to-video AI generation app as well. We flip the board, take a look at some of the chip stocks in China that we are watching. And yes, we are seeing all of these stocks, right? SMIC, Huang catching a bit, Will Semiconductor as well. Now, Wingtech is one that we're watching very closely because the Xperia, the Dutch semiconductor firm, finally is back to Chinese ownership. The Dutch government finally settling the spat with the Chinese government after intense negotiation. We are seeing the loosening of the export restrictions for its Chinese factory here. Wingtech gaining about 3.6% here. And flip the board, we're also taking a look at the brokerage sector in China because we have news of a surprise merger between CICC and 2 other brokerages. CICC, of course, is one of the top investment banks in Hong Kong, especially for Hong Kong IPOs. This is part of the Chinese government's move to try to reform the sector, to try to groom more companies that could become world-beating players to compete with the likes of Goldman Sachs and JP Morgan. And you can see here the brokerage index onshore up by 3.3%. This could be a jolt for onshore Chinese markets as well.
All right, Min Min, thank you. Min Min Lo with an update on what markets are doing here. And yeah, marking this Chinese Open that continues to the good news here this morning on the back of what we heard from Nvidia, right? Strong revenue forecast for the current period is helping to counter concerns that a global surge in AI spending is poised to crash. Now, the CEO, Jen-Hsun Huang, spoke to us exclusively about the outlook for Nvidia and the AI sector.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jen-Hsun, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin's going to be just really smooth, and we're going to ramp it really hard.
Jen-Hsun, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the US government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
To all the bulls out there, that's where you send the thank you card to Jen-Hsun Huang, NVIDIA CEO, of course.
Merry Christmas.
Merry Christmas. Happy Valentine's. Happy Thanksgiving, in fact, all the way into this and next year. Speaking exclusively, of course, to our colleague Ed Ludlow there. Really, on that very note, have a look at these names coming through as well. 3.5% on the Asia IT Index. Incredibly heavy volumes in some of these names. Let's get the insights out of Paul Dobson, of course, our executive editor for our Asia markets, is with us right now. Paul, I mean, suffice to say, the earnings are taken very much in stride by the bulls today. Where do we go next with this story?
Yeah, morning, David. Good question. I mean, the market needed something of a circuit breaker after the recent doubts that it had been having over the AI trade and the significant rally that we've seen all the way since April this year. And we got it right with these numbers. Everything looks good and positive for the chip sector. And the narrative that's being spun is one that's particularly bright, looking for the future as well. So as far as we're concerned for today's price action, you know, it's all being taken positively. You know, Jen-Hsun Huang reeled through the list of suppliers in our region, and they're all, unsurprisingly, having a good day too. I think that the next things that people are concentrating, though, on are still the funding costs that are required in order to build out all the data centers across the US and around the world, whether the market can tolerate that, whether there's enough money out there to pay for it. You know, we've seen some cracks recently in some of the bonds that were issued by some of the companies to pay for it. And so that, I think, still remains a little bit of a question. And the other side of it, you know, what are the results? What are we getting out of it? What's the productivity lift look like? What are the outcomes? I think that the Gemini 3 model reviews, the Alphabet products, have been rave reviews, basically, very favorable reception. So that's another positive, actually, for the AI sector in general. You know, weighing against that, we've got still doubts about the Federal Reserve's interest rate path from here. So the stock market more broadly beyond the tech story is certainly not out of the woods yet. The market would love to see a Santa rally, but it's not nailed on at this point, I would say.
Yeah, Paul, you mentioned about the data, right? We got that update that, you know, we're going to get the September jobs report this week or today, later on today.
Yeah, that's right.
But the October one will not be released. I mean, that's still leading to quite a lot of uncertainty in terms of the data side for the Fed. You know, do we need actually now a Fed rate cut in December to solidify this rally?
The market is basically ruling out that possibility at this point. We're only priced at a 30% chance that the Fed will move. And that has been weighing against the market recently. So I think if that were to come back, that would definitely be seen as a positive for the markets. But at this point, we're kind of looking forwards and beyond that and thinking about, well, when we do start to get the data again, are we going to see enough negativity that it will convince the Fed to cut in the first quarter of next year, at least? It's a difficult situation, right? When we're in this vacuum and, OK, we get the September jobs report today, but that's going to have to tell us something particularly alarming if it's going to change those Fed opinions. And after that, we'll get the private numbers, but they've been a sort of, you know, up and down, a little bit inconclusive, I think, as well. And I don't know whether the Fed as a whole would like to set its stall completely by that, based on the narrative that we've heard from the policymakers and what we saw in the minutes that were released yesterday, US hours as well. So we're a little bit flying in the dark, just like they are at this moment in time. I think that December seems off the table, but maybe there'll be more hopes for Q1 and more cuts next year.
Paul, fantastic. Thank you so much, sir. Paul Dobson there, our executive editor for Asia Markets, out of our Singapore office today. Right, just looking ahead across the region and certainly this market as the backdrop of that Hang Seng Index. We're about 12 minutes into the cash market session here. Taiwan about 42 minutes. And as you can see, Singapore lagging behind. That's for many reasons, which we'll get into, of course, to the CEO of the SGX joining us in a couple of minutes. We're up 1.7% on their stock. Plenty more ahead. This is The China Show. Right, welcome back. You're watching The China Show. We're looking at a rally across these markets. We're about 15 minutes into the cash market session in Greater China. Let's pivot now and talk about where we are right now in Singapore. Singapore Exchange shares are up 1.7. The company's planning to work with the NASDAQ, and here's the interesting bit here, on a new dual listing mechanism for market to boost the local stock market and also improve trading liquidity.
Yeah, joining us now is Boon Lo, CEO of the Singapore Exchange, to tell us about this big announcement. And it's certainly one that's quite timing-wise is great, I think, given the euphoria around AI and tech companies here right now. Tell us in terms of what the target is going to be with this new regime and what sort of companies you're looking to attract.
Well, we have our best IPO market in the last quarter, ranked within the top 10 globally. But companies have been telling us that if there's an additional pathway to connect US to Asia and allowing better access into a global capital, they would like to look at it. And I think there are many tech growth companies in this part of the world that are ready for the IPO market. And we know what it was like in the previous few years. So this pathway together with NASDAQ allows for tech, high-growth companies to tap both the global capital and with the Asian nexus. We're excited. We're getting domestic support. There is going to be more pots of pre-IPO cornerstone that issuers can look forward to.
So how are things going to work operationally? And when does the new connection launch?
So this will be a harmonized cross-border listing framework with a streamlined regulatory obligations across two markets and a simplified review process. So it's one set of documents that the issuer will have to prepare. And we're hoping to get this going by the middle of next year, subject to regulatory approval. And announcing it at this point in time is to get companies' attention for them to prepare.
Boon, I think about the ones that got away, like the ones like Grab, like the ones that decided to list overseas. Is this going to be the mechanism for them to come home? And have you heard anything?
Well, there are many more unicorns in this part of the world. There are VCs, PEs who need to get their company ready for IPO. Once a cluster is being built up, we're sure there'll be companies coming knocking at our door.
Right. Have you worked out some of the initial numbers? What are your initial expectations on financially and tangibly how the business is going to feel the positive impact of this?
We have in the last few months embarked on deep, broad consultation with the ecosystem. Companies who are looking to IPO tell us that this is something they're looking forward to. Post announcements, we've gotten many positive reaction. And I think this will just supplement and complement, importantly, our IPO market that's seen a turnaround in the last couple of months.
Yeah, I take a look at a day like today where Nvidia news is basically lifting some of the likes of Taiwan, Korea, Japan, Hong Kong. Singapore does get left out when there is this sort of tech and AI euphoria. Beyond just this news, though, do you think there's any other ways that you can mitigate sort of the outflow situation? Given the fact that, there's so many tech-heavy benchmarks out there that you have to compete with now.
We have $2.4 billion being raised in the IPO market in the third quarter across different companies, including some SaaS company, a US NASDAQ-listed company that also did placement in Singapore. I think we have a very strong foundation to build upon. And we're knocking at each other's door bilaterally. Companies with us and us with the companies.
What about Chinese companies? Have you been seeing any sort of interest in Chinese companies wanting to list in Singapore?
One of the strengths of SGX is we have multiple listing pathways, including those for Chinese companies. Chinese companies, in particular with a Southeast Asia or Asian nexus, expanding their footprint outside of China. We have a platform ready for them.
Right. And I think just to build on what Yvonne, and you mentioned, of course, a lot of the big tech and unicorns that are looking to list in Southeast Asia. I mean, I just look around on the way from the airport. You really feel that this is really an innovative city. And I wonder whether the representation within the index itself and what the exchange is looking to do to enhance the tech and AI representation within the market.
Yeah, so the sector aside, we've taken the big step to have what we call the Next 50 index, which will really capture many of these companies, not just tech unicorn, but in the space where their size may be overlooked because they're not in the index, and we're ready to try and include some of these companies.
Okay. Next 50.
Yeah, I mean, talk a bit more of the rest of the business here in terms of the pipeline. You mentioned about it's one of the best IPO markets you've seen in 6 years or so. What is the pipeline looking like so far for next year?
Well, we have over 30 companies in the pipeline, and that's growing. And pipeline for us is defined as companies who are working with advisors preparing for an IPO on SGX. And with news like that, with work that's being done by the broader ecosystem through the review group, we are hopeful that our pipeline will continue to grow, and importantly, making sure it's an efficient process for issuers.
Looking at next year, what specific targets do you have for the business, including discounting, of course, this new connection that's going to kick in middle of next year? How much growth do you see in the overall business?
Come next Monday, we're launching a institutional-grade perpetual futures, and that's to create the regulated plumbing for institutional investors looking to access the crypto market. We're also expanding our FX business. We've guided revenue growth over the medium term of 6 to 8%.
Okay.
We think there are many opportunities for us to be able to hopefully outperform.
In terms of investments, I mean, you've mentioned before you're interested in maybe some acquisitions.
Yeah.
Can you tell us a bit more? I mean, what sort of targets are you looking at right now?
People are very curious about this question.
Well, we have a multi-asset platform for access in Asia, connecting the global investors to this part of the world that has really served our participants very well across FX, equity derivatives, commodities, and importantly also freight, which is really an important risk management to today in the uncertainty around trade. So we'll be looking to build upon our strength, whether that's commodities or even some of the asset classes.
Do you have a ballpark for how much you're willing to spend?
We have a strong balance sheet.
Okay. Well, yeah, that's public information. So we're gonna have a look at that and see how much you can allocate towards that. Let's speak again soon. Thank you so much.
Thank you
for taking the time. Yeah. Congratulations again.
Thank you.
On the NASDAQ collaboration there. That was Boon Lola, of course, CEO of the Singapore Exchange.
Yep, coming up here, we have plenty more coming up at the New Economy Forum there. The NASDAQ chair and the CEO, Adina Freeman, is going to be talking to us in just about an hour's time, of course, about this kind of dual listing regime with SGX as well, and plenty more. That interview coming up on Insight with Haslinda Ahmed. This is Bloomberg.
Good morning, welcome back. You're watching the China Show. If you're short, either that or you're a bear, look away now. Yeah, today's not the day for you. Although if you are short, of course, it's a good day to be covering. Perhaps that's one of the constituencies. Looking at this, the CICC merger plan is going to be interesting to see and how that's playing out already in terms of market reaction across the brokerage space in China. That's playing out quite nicely. There's also the fact that the market is doing well, so that's also really been boosting the businesses of many of the brokers. These are mostly on your screens. That's A and HS, of course, on that constituency. About 25 minutes into the session, we're looking at the benchmarks coming up on your screens. We're looking at some nice gains across the Hang Seng Tech. CSI 300 is going the opposite way. Hang Seng Tech, of course, coming up on your screens right now. It's interesting when you look at this against the backdrop of a broader AI-fueled rally across most of Asia. You look at Korea, you look at Taiwan, you look at Japan. It's not showing up to that extent in Greater China so far. There's plenty more ahead, of course, here coming through out of the New Economy Forum. We're live here out of Singapore, and we'll leave you with a look at some live pictures taking place right now inside. This is Bloomberg.
Welcome back to the China Show. We are here, day 2 at the Capella Hotel. Beautiful venue here once again for the Bloomberg New Economy Forum. And yeah, great conversations we've had so far, really, on this kind of changing of the landscape of U.S.-China trade tensions and the like, and really what still is something that's still intact and what really has changed. We certainly have a lot of conversations with Lawrence Wong about that, the Prime Minister of Singapore yesterday. Right now, we're talking about AI, right? Given the Nvidia story that keeps going here in the Asia session, we have Rishi Sunak, the former UK Prime Minister, talking about AI coming up too.
Yeah, the spotlight on AI, that's the panel that's about to start right next to us here. Of course, we're coming to you live, as Yvonne is pointing out, beautiful venue here.
Remember when we saw yesterday?
Oh yes, yeah, we were literally on the sidelines.
We called it the quadrant.
Yes.
Who
was there?
With Bloomberg,
yeah.
Mike Bloomberg,
our boss was there. Yep.
Sunak, Gina Raimondo, and Lawrence Huang all huddled, and it was just,
you could barely see anything through the...
To be a fly on the wall.
The silhouette of the bodyguards and everyone in between. Yeah, there we go. So we are starting that, and we'll get you more details once we have more information as things get warmed up there. Inside the hall, right outside where we are, is the sets at the beautiful Capella Hotel here in Singapore. Beautiful venue. Terrible day, though, for the weather. It's been raining all morning, so let's see what happens here. In the meantime, though, let's just pivot away from this. Certainly, the AI conversation's been showing up across these markets, and it's really a day when I woke up, I looked at the Nvidia story.
Yeah.
And the other news was, of course, the October jobs report that's no longer coming out. They're folding that into the December jobs print. Markets have now basically kicked the can down the road on the next Fed cut, which, by the way, because of the former point you were making, it doesn't seem markets will need, at least for now, in terms of what's going to be fueling this rally.
You basically have Jen-Hsun Huang as Santa Claus, right? He's going to be the one that's going to be taking, hopefully, this rally up until the end of the year. That's what it feels like now. Yeah. We'll see, right? Let's take a look at how markets are doing, right? 30 minutes into the session, and bring in Min Min Lo in Hong Kong. Hey, Min Min.
Yes, and with Jen-Hsun Huang as Santa Claus, that is certainly playing out right here. We have seen the market jitters leading up to that earnings call really been very intense, right? A sell-off over the last few sessions, but things are finally coming down and picking up once again. We're seeing some of the tech-heavy indexes, the Nikkei particularly gaining about 3.5% here, TAIEX as well up by 2.6%. But we flip the board and take a look at some of the big chip makers here in Asia, right? TSMC, of course, up by 3.5%. And look at Adventus. It was at one point limit up at 10%. Now it's at 9.6 or so. But it's the water that lifts all boats, right? Even the Chinese chip makers that are not necessarily benefiting from Nvidia's business as well, also gaining. So largely all the chips players in Asia, whether it's Taiwan, China, all looking good today. But this is a very interesting story. We have some idiosyncratic stories going on between BYD and Leapmotor, these two rivals, seeing a fresh spat that is playing out in public. Stellantis, one of the top executives, is saying that its Chinese partner Leapmotor is outselling BYD in Europe's largest market in Germany, even though Germany's transport authorities' data show that BYD is actually in the lead. And in September, we already saw BYD putting out a rare press release refuting the Stellantis CEO's statement. But here we are seeing both stocks not doing too well today. Zhejiang Leapmotor down by 2%. This is despite BYD announcing that it wants to be the market leader in Brazil in 2028. So we are seeing the intense competition playing out here. The competition runs deep because we know BYD had been hiring some of the executives from Stellantis to join its company in the past.
All right. Yeah, that competition firing up, it seems like in Europe. Min Min, thank you. Our China correspondent Min Min Lo there on the markets here today. And earlier we did speak exclusively with Jen-Hsun Huang, the Nvidia CEO, on how he hopes to re-engage with China.
Nvidia's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero. Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
All right, let's stick with Nvidia. I think that's the first time I've seen him in a suit. Is it?
I like him better in leather.
Yeah.
Really.
he should combine the things. But he clearly suits it
a
up.
leather suit?
Yeah, well, yeah. I think you have another concert in mind. Annabelle's with us to help us unpack, of course, those earnings and the implications across the supply chain in the region. Our tech correspondent, of course. Belle, what do you think? Does he look good in a suit? And what do you think of this fierce market reaction we're seeing across these markets?
I mean, Dave, I do have to say he usually suits up for earnings, so it's not the first time I've seen him wearing one. But I mean, I thought he looked sharp, actually. I have to say, I really did take note of that suit he was wearing and thought, okay, you know, when you're worth this much money, I'm glad that you're putting it in, part of it at least, into your wardrobe. But yes, in terms of what stood out from the numbers, I mean, it was, as Min Min was saying, a very, very strong reading. The expectation was just so high going into this. There were concerns he wouldn't be able to deliver, despite how strong the numbers were. But you're just seeing that sense of relief coming across today in the session, like Biden, for instance, over in Tokyo, trading more than 10% to the upside. But he did speak about some of the challenges as well, because this is a company that's growing around 60% year on year. You're talking about billions of dollars in market cap that are being added each quarter. That's the size of entire businesses. And he did speak about some of the supply chain challenges that we can get to in a moment. But overall, yes, the key takeaways are they lifted their sales forecast for the next quarter, saying they're going to generate about $65 billion in revenue. They continue to say that sales for Blackwell are off the charts. They're ramping up their Rubin rollout as well. And again, that question around China, no, it's not going to be accounted for in any sort of revenue forecast. They're continuing engagement with both governments in the US and China. I think if there was really only one sort of weaker spot, that came down to the margin, because it just missed estimates from analysts, and that does also put into question really those rising supply chain costs as well.
So the message for key Asia suppliers, what did Jen-Hsun say about that?
Yeah, so he did speak about how pivotal it is when you're growing at the speed they are, that you do need to have very strong relationships. He called some of them out by name, TSMC, for instance, with one of those. But when you talk about the supply chain constraints going into next year, a key one that's already shaping up is going to be in the memory space. And we were discussing, for instance, last week that reporting we had from Reuters that they were looking at raising the price of one of their key memory chips, that's the DDR5, that's very pivotal to AI infrastructure, by around 60% just in November alone. So there's really not much doubt on the demand side for Nvidia. The question is how much capacity they can book with the likes of TSMC, for instance, around advanced packaging, how they can work with their suppliers like Honhai or Foxconn as well, of course, over in Taiwan, and then also the memory chip plays you see in Korea, and that specifically, of course, I'm referring to Samsung, SK Hynix. You can see that SK Hynix, again, liking this earnings report, but that is going to be that big question, because Nvidia is, yes, of course, it's a US company, but the story and the way that it's built is very much an Asia one too.
Belle, thank you. Annabelle Jewelers there with breakdown, of course, of those Nvidia earnings. And yeah, we're hearing in the panel just very much on that very topic, right? The spotlight on AI with the former UK Prime Minister Rishi Sunak. That panel is underway here at the Capella. Let's listen in.
What those companies have found is they benefit from that interaction, because ultimately they don't have the same national security expertise that exists within governments. So having those people be involved in the process of...
Just the collaboration.
Exactly. That collaboration is valuable to the companies. And look, I don't think anyone wants to put something out there into the world which they think could genuinely cause significant harm, whether it's cyber, biological, or nuclear or chemical
They don't
nature.
intend to put
Exactly. So if we have the ability to, look, let's work through those things with you in a collaborative fashion, and this is not regulation, this is, as I said, technical evaluation.
But just to make sure that there are no unintended consequences with algorithms that are perhaps designed for engagement, the same way social media put out technology meant to connect us, but it did end up having these harmful consequences.
And that's exactly the point. And look, these companies all themselves conduct this testing as they should. But I don't
so we will leave it there for now. That's, of course, the ongoing panel here at the Bloomberg New Economy Forum taking place. For our Bloomberg clients, of course, who do want to keep an eye on that as well, and the commentary to TLI Vigo. We have an ongoing blog, of course, at discussing everything that's taking place, plus, of course, more importantly, the context beyond and surrounding those comments coming through. Let's pivot slightly back to the market side of things, along, of course, the broader conversation there around AI. Let's bring in Abhishek Vishnoy, our senior Asia equities reporter, joining us, right, to talk about this. So clearly, Abhishek, thank you, by the way, sir, for joining us. Good set of numbers. Markets are reacting positively. That's an understatement. Price target for Nvidia is now $240. That's the consensus right now from the street. My question now is, people keep talking about this concentration risk in markets, and does this even fuel further that risk, given the fact that these are such a great set of numbers?
I mean, I don't think so. There is a lens by which you should be looking at concentration risk when your life is revolving around the Mag 7. And rightly so, the market value of Nvidia is 5 trillion or more, and of the other companies as well, market cap is increasing. It's like, going into the argument that everybody in the school should get a consolation prize. There are outperformers, there are people who are, topping the class. They should be valued like that. So I don't think there is a risk in that. You would see if tech going down, then market is going down because, these guys have become way, way bigger than what we have seen in previous cycles. And if the tech is moving up, there would be a tech-led rally, which will probably broaden, the rally going forward as AI use cases increases. Now, if you look in context of what Nvidia has delivered, it has steadied the ship. If, let's say, Nvidia's peers or other AI hyperscalers give similar sort of guidance, down the road, the AI capex continues, with free cash flows, not from debt or other sources of funding, then, this trade can actually broaden itself. Market may see better days. Just yesterday, we were talking about all kind of technical breakdowns, and ominous patterns and, big falls in, Asian AI trades like Kospi, Taiwan, Taiwanese stocks, etc. But today, all that has been thrown out of the window. You have gone from, talking about these breakdowns to now looking at upside and even possibly a short squeeze. Guidance is great. It has actually beaten buy-side whispers. And, as we all know, China is not contributing anything to Nvidia right now. There is the China optionality. You may not have to value it with a price to earnings multiple, but there is optionality, so you would not value it at zero. So, that is still something that can surprise investors. Remember, US-China trade tensions are in the rearview mirror now, and there is this 1 year window where things can change.
Yeah, it's interesting how investor preferences have changed as well. Global fund managers seem to be still quite optimistic when it comes to China, but I'm looking at that Bank of America Asia fund manager survey that just came out recently, Abby, and it seems like Asia is a little bit less optimistic about China now. In fact, they prefer markets like Japan, Korea, Taiwan more than the China story. How do you square the two dynamics that we're seeing now?
See, Asians obviously know more about Asia, right? So they're a little more confident about how they should be valuing China, looking at China. We are coming off a very, very good rally in Chinese stocks. We've seen AI also making significant market cap there. But now the question is, given the policy flip-flops that we have seen in the past, where would the valuations be of China from here? Will there be a rally in 2026 led by valuation expansion, or will it be led by earnings growth? The bet is that it will be more about earnings growth, because valuation expansion at around 13x, 12x, you are already trading where you should, given the policy flip-flops that have happened in the past, given the averages that you have enjoyed in the past. Now, if you look at things like Gordon growth model, or you look at the risk-free rate and then try to calculate the multiple of Chinese equities, that multiple remains where it is. That's why, people are talking about, okay, right now the upside in Chinese stocks, would be there, but not as much as it was. And, honestly, I saw that survey. I think it has to do more with the fact that the latest set of macro data was a bit weaker. I don't think we can write an obituary of China based on that.
All right, Abhishek, thank you. Senior Asia Equities reporter Abhishek Vaishnaw there joining us in Singapore. And coming up on the China Show, we'll be speaking to, of course, some key guests here at NEF here. Global 6 founder Lola Woetzel. She used to be the rainmaker when it came to McKinsey in China. Also, we're talking to Sila Nanotechnologies. They are wanting to be the next alternative when it comes to the EV battery space, too.
Yeah, and if they're successful, not to say that they're not currently, but if they go widespread and fairly widestream, who gets this place, right? It's going to be an interesting conversation how we power this AI story, really, and really that's going to be part and parcel to the questions investors are asking, who's next? And of course, coming up here, lots more ahead, in fact, here from the Bloomberg New Economy Forum taking place. Yeah, lots of names to watch on your screens today. Of course, we're just getting warmed up here on day 2. Plenty more ahead. This is The China Show.
All right, we're taking you back live here at the New Economy Forum, and our next guest, she is known as the architect, and really when it came to expanding McKinsey in China way back when, and now she is now supporting cities and institutions and managing large urban planning projects. Global 6 has worked with local governments on projects in China, India, Europe, and the Middle East. Let's bring in the founder and managing partner, Lola Woetzel, joining us right now. Lola, it's great to have you here.
My pleasure.
And yeah, we talk about, where we are in this whole U.S.-China discussion, right? Now that we are in this kind of one-year truce. The sentiment here seems to be like things are going to be doing quite well. At least we've stabilized things for now. What's it been like on the ground in China and Shanghai where you are?
Well, I think in the last quarter, maybe 2, we've really turned a kind of corner here where, this period of uncertainty, which kicked off arguably 4 years ago, I think we're kind of over it at this stage. And it's like, we understand there are risks. We know that there's volatility. Not everything is perfect. But we have to go forward. We have to actually make our investments. We have to deploy capital. We have to start consuming a bit more than we have. We've repaired our balance sheets for the most part. So the view on the ground, I think, is that while it's not the 2019 go year, it is considerably better than where we were 2 years ago. And I think we're poised for growth. I really feel like there's an optimism here.
How does the consumer feel to you on the ground? And obviously Shanghai is a very small subset of the broader consumption profile of the mainland consumer, but how do things feel on the ground there?
Well, I think that's best represented by the Louis Vuitton ship.
Yes. I've seen it. Next to the Starbucks Reserve, right?
Yeah, next to the roastery, both among the largest of their kind in the world, and with a line around the block to get into it. Now, whether they're actually buying the product is a different issue. So I have to say I understand Louis Vuitton's quarterly results were held up basically by China. So somebody's buying the product. But yes, I think the consumer is the Shanghai and Chinese consumer. It's aspirational, it's a bit fickle, it's very, very bargain-oriented, value-oriented. But the key thing I always think to remember is that the Chinese consumer saves 30% of their income every year. Every year they have more money, and it's going into the bank account, but then sometimes it comes out, and when it comes out, it buys a lot of handbags.
Or cheap coffee sometimes.
Or cheap coffee. Right? Well, that's the other part, because the Chinese consumer is, it's in many ways you could say spoiled for choice. And that now there's always a name brand, there's a global brand, but right next to that global brand, there are 5 or 6 local copycat, but alternatives. And they actually are offering a different proposition most of the time. So that's the Chinese consumer. They get to make that choice each and every day.
Does it at least, I don't know, the whole kind of concerns of deflation, do you see any signs of that letting up in any way in the economy now?
Well, we call it nadron or involution. And I think that it's present in a lot of manufacturing sectors. There is overcapacity, but we have to look carefully at what that is. So if you look at the auto sector, there's overcapacity, but it's mostly in traditional internal combustion engine cars. Those are the factories that are running at 50, 60% utilization. If you look at the EV factories, those are closer to 80 or 85. It's not perfect again. But yeah, I think that this is partly at least technological shifts as the industry is moving so fast that people who had factories for old stuff are no longer being able to depreciate, or they no longer occupy them. So that's a bit of it. And the rest of it is, China's fairly undisciplined approach to capital allocation. We just tend to throw a lot of money at things, and it's a last person standing kind of outcome. So ones who are cash positive at the bottom of all that will consolidate things.
I want to tie in your current expertise, of course, into let's call it unlocking the potential. So urban planning goes into really unlocking potential of, let's just call it the microeconomy, the GDP per capita, the ability of consumers to be able to, the mobility of consumers, for example. What are you busy with? And how do you look at that juxtaposed against the macro?
Well, China has, of course, gone through the single biggest migration in history over the last 30 or 40 years, just in terms of numbers of people, 400 or 500 million people. And so we built a lot of stuff. And now, I wouldn't say it's over. There's still more to be done, but a lot of it is in the renewal stage. So the work in China is around particularly technology, infrastructure to be put into cities. So in Shanghai, for example, urban renewal around smart city technologies. We call it quantum city now.
Quantum city.
Yeah, so it's a lot of simulation and planning for urban services. How do we make the streets safer? How do we deliver the trash to where it should go and manage recycling? Those are kind of China problems. Other places is different. If you look at India, only 30% of India has been built. 70% remains to be built. So they are in that stage of it, which is more about taking advantage of what we now can do in terms of building modern infrastructure and finding places for it. Because so different countries, different kinds of projects and involved in both.
Yeah, I want to ask you about, interesting you brought up technology. As China looks to, let's call it the bulk of the migrations taking place. You have these mega cities, Shanghai, Shenzhen, and the new evolution that they need to sort of come to grips with, things like driverless cars, for example. The low altitude economy. As someone that looks at cities and how to plan a city of the future, what are the first things a developed city like Shanghai, for example, need to be thinking about? Just, I guess, as an example of how other cities should be thinking about these things.
It's a terrific question, and I would always, sort of put people first. So they really have to start with inclusion. And so the good news is that every decile of Chinese society has improved its standard of living over the last 30 years. Everybody's been better. But some people have been better than others. So the gaps are growing. And the challenge in a modern city, like in anywhere, is to make sure that we all can participate. And so every time that we introduce an automation tool, we throw somebody out of a job. And so where do they go? And how do we ensure that they still literally have a place in the city to sleep? So those are the challenges for China, for Shanghai, particularly as Shanghai is a modern city. And it's a mega city that's been incredibly successful. But now it faces the challenge of that success. So that's the number one thing. Beyond that, environment, of course. When we grow, we tend to pollute. And so managing the externality, again, climate, huge issue, adaptation to the hotter, wetter world that we've been creating here. And then finally, of course, the economic engine underlies all of that, which is how do we continue to innovate. And China now has its 1,000 Talents program kind of scaling up with free visas for people who have gone to college. So basically, fine. So, okay, but that's not really how you do it, but it's going to be a part of the solution. So,
Lola, we could spend a lot of time on this. We'd love to continue this, of course, next time. Thank you so much for the time.
My pleasure. Thank you so much.
That was Lola Woetzel, there, of course, founder and managing partner at Global 6. And trust, that's not going to be the last time you're going to be hearing from that conversation taking place there. We have more coming up here out of New Economy Forum taking place here in Singapore. You're watching The China Show. Good morning.
All right, it is all about Nvidia here today. The strong revenue forecast for the current period is helping to counter concerns that this global surge in AI spending is poised to crash. But CEO Jen-Hsun Huang told us that Chinese sales are not included in their outlook because of those U.S. restrictions. He spoke exclusively to Bloomberg about trying to re-engage with China.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jen-Hsun, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jen-Hsun, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the US government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
There we go. That was, of course, in case you didn't know, that was Jen-Hsun Huang speaking exclusively to Edla, the post-earnings. Market's still feeling, of course, the after effects of that. And I imagine that's going to play out across the session, across Europe and the US later today. Right. Let's turn our attention now from specifically AI chips to battery technology. Sila Nanotechnologies is a US-funded company that's aiming to become an alternative to China in global supply chains. Joining us now is the co-founder and CEO, Gene Berdichevsky, joining us here on set. Very nice to see you and good morning.
Yeah, thanks for having me.
In very simple English, yes, we just read a bit of Greek there. What do you guys do? What's the technology?
Silicon anodes. Yeah.
Silicon anodes, yeah.
Yes.
So what does that mean? Inside every lithium-ion battery, there is a critical component, the anode material, that helps it store energy. For 34 years, that component has been graphite, predominantly made and refined in China, maybe 93% these days. We replaced that with a silicon-based anode that gives you much higher performance, 20 to 40% higher energy density. So think longer drive times, longer flight times, your laptop, your phone lasting longer. And it has a different supply chain that allows us to manufacture this in the West very cost effectively, very cleanly, and displace some of that critical dependence that the world has on Chinese graphite today.
In terms of how it's processed, I mean, can you tell us a bit more about what that process looks like in the capacity that you have right now?
Yeah, so the key challenge with this technology, we invented it over the last decade, and we've now scaled it up about 1,000,000x from the lab scale where we made it in grams. We just opened a factory in Moses Lake, Washington. This produced several gigawatt hours equivalent, so it'll support quite a lot of batteries. And we process it really through a novel thermal process where we convert a silicon input gas into this material that then further goes into the battery maker and gets integrated into whatever kind of battery they want to make, whether it's an EV battery or a drone battery or a phone battery.
So in terms of the current applications right now, so just give us a sense of your current customer base. Who's using this stuff?
Yeah, so far we've launched in several million small consumer devices across a couple customers. So think wearable devices that are smaller because of this technology. But with this new factory coming online, we have a lot more production capacity. And so in our pipeline of customers, we have cell phones, we have power tools, we have satellites, we have drones, and of course electric vehicles. Data centers as well. So when you're talking about AI data centers, they need better batteries because the workloads are so spiky. They cause a lot of issues with energy, and so silicon anodes can also help in that domain. So really, anywhere where there's a lithium-ion battery can benefit from this technology, and you will see it diffuse over the next 3 to 5 years into every single aspect of our lives.
How do you see the competition now in the EV battery space? I mean, everyone talks about China, CATL, for example, and where they're really leading and dominating when it comes to innovation and technology right now. How does it compare with what you're seeing over in the West?
Yeah, so companies like CATL, Panasonic, Samsung, LG, those are ultimately our customers. So the battery makers buy anode materials, again, today, they buy almost entirely Chinese graphite, Chinese-made graphite, but they can start to buy Western silicon to displace that. And so really, for us, it's a performance and supply chain differentiation relative to the baseline. So for us, we're really looking at it more of a technology shift than direct competition with graphite anodes. I think over the next, again, 3 to 5 years, we're going to see silicon start to replace graphite in most applications. And in the West, the customer base is obviously very different. LG, Panasonic, Samsung tend to be the leading battery players in the West.
The pitch, obviously, we've spent just the better part of 4 minutes on this, so it's clearly not as comprehensive. But the pitch seems very straightforward. And the confidence I sort of get from you is that it's a matter of time and scale more than a matter of competition. So it seems straightforward, but when you pitch this to customers, for example, is there just a mental shift that needs to take place? What is that? What is that thing?
Exactly right. So just like lithium-ion replaced nickel metal hydride, right? That took time because lithium-ion was new, it was different. Nickel metal hydride batteries were very robust, very well understood. Customers have to work on adopting it, so that's one of the barriers. Is it's a different technology. You have to tune how the battery's made using this technology, but ultimately you get to use the same factory, and that's really, really important. So if you built a gigafactory for conventional lithium-ion, you can implement silicon anodes there.
Right.
But the other big barrier is just scale. So we've got a couple gigawatt hours of production capacity. Next up, we're going to 10x that to say 25 gigawatt hours. And then the world today needs about 2,000 gigawatt hours. So just thinking about how long it'll take to scale.
Yeah.
Right. And this sounds like, could be wrong, in a few years this might become a political story just because of the type of things that goes into some critical technologies. Is that something
I don't think it's in a few years. I think it's probably in a few months because just as with rare earths, if China were to exercise export controls on graphite, and they were included in the export controls that were released 2 months ago, but are paused. you would essentially shut down most Western battery factories and all Western EV factories. So you'd have hundreds of thousands of people unemployed the next day if graphite were restricted from being exported.
Wow.
So I think that it is less talked about than rare earths, but the concentration, the geographic concentration of supply chain is just as high. And so it's something that governments have to contend with, and this is one of the solutions is moving to this new technology.
You mentioned it's a matter of months.
Yeah.
How are you preparing for any sort of possibility of,
I was going to ask that. Yeah.
So we're working very hard to design the next generation of our plant, the next plant, the 10x expansion.
Yeah.
And so, we have a lot of obviously, you can't build a factory like this in months. It's a very, very large facility, but I think we're keen to scale, and certainly, I think cooler heads will prevail in the global trade scene. As we've seen the pause with rare earths and other things. So I don't expect it to happen, but what I'm saying is I think this can be an issue at any moment.
Yeah.
And I think for us, we just have to focus on scaling up the production.
Gene, it's great to have you. Gene Berdichevsky there, co-founder and CEO of Sila Nanotechnologies. I'm going to have plenty more coming up here at the New Economy Forum, plenty of conversations coming your way, including with the NASDAQ chair, Dina Friedman, and Tokyo Marine Asset Management's CEO, Kazuya Nagasawa. Much more ahead. This is Bloomberg.
It's fun. It's fun out there today if you're long these tech markets. I guess with the exception of what's happening here.
And HS Tech is actually a negative right now. It's interesting.
And I wonder what's behind that, just looking underneath the hood. But that's just to say the Nvidia tailwinds are playing out not as broadly as people perhaps would have initially expected, but it's playing out across quite strongly in the markets that do have that representation.
Yeah, HS Tech, Kingsoft is down some 11% here right now. XPeng is also down some 5%. So there are some big kind of things that are dragging down HS Tech here. But yeah, certainly it's interesting that they're bucking the trend here, given all the optimism. But yeah, we have seen when things are actually pulling back in the whole AI story, China Tech actually does quite well. So it's a bit of a reverse of that here today. In terms of some other stories that we're tracking for you around the world, the latest when it comes to the China and Japanese situation. China is said to be freezing the regulatory reviews for new Japanese films as their diplomatic dispute over Taiwan shows little sign of easing. Sources say officials have also suspended 6 Japanese titles that were previously approved. It comes as China halts imports of Japanese seafood just months after Beijing lifted a similar ban. Tensions are high after Prime Minister Sanae Takaichi's remarks on Taiwan being a potential existential issue for Japan.
Because of Japanese Prime Minister Sanae Takaichi's egregious moves and erroneous remarks concerning Taiwan and other major issues of principle, there has been strong outrage and condemnation from the Chinese people. Under current circumstances, there will be no market for Japanese aquatic products, even if they enter China. If Japan refuses to retract the remarks and even goes further down the wrong path, China will have no choice but to take strict and resolute countermeasures.
Cathay Pacific will allow travelers, meanwhile, to Japan to modify their flights following Beijing's earlier call for Chinese citizens to avoid going to the country. In a statement to the South China Morning Post, Cathay says the airline will remain flexible, but did not say if passengers will be allowed to cancel or change their Japan-bound flights for free. Taiwanese President Lai Ching-te is urging citizens and businesses to avoid Chinese-made apps, warning of cybersecurity risks and potential data leaks. As after Taiwan security agencies say they found excessive data collection and information distortion in tests of Chinese AI apps. Lai says China could exploit these tools for cyber attacks, surveillance, or cognitive warfare targeting Taiwan's national security.
Right, so we're coming to you live, of course, for viewers just joining us right now out of the Bloomberg New Economy Forum here in Singapore. There's a bit of backdrop noise. That's because the panel that just ended there's been a bit of a shift in terms of the crowd. Right now, just starting, Eric Schatzker, as you can see, they're in conversation with Ashwini Vaishnaw there. Of course, the spotlight on India is now starting.
Yep, let's listen in.
It can compete on in all of those arenas with the United States and China? What's the strategy?
Our design capabilities, our ability to look at very complex problems and solve them, our ability to have a talent pool which can be basically deployed in any major technological stuff. These are certain advantages which we think will hold us very strong going forward. I'll give you certain examples. I'll give you a few examples too. First is, let's take the case of semiconductors. Now, we started on the semiconductor journey just about 3 years back, 3.5 years back. Today, we already have an ecosystem developing just in 3.5 years, where production of chips is starting, design of some of the most complex chips is now happening in India, all the way up to 2 nanometers. I'll give you a second example. Take the case of space. Now, we opened up this sector just a few years ago, just about 4.5, 5 years ago. Within a short time frame, we have about 80 startups working in space technologies. I'll give you one more example. Just about 10 years ago, India had just about 400, 500 startups. Today, we have 190,000 startups. We are among the top 3 startup ecosystems in the entire world. The entrepreneurial energy, which is one of the foundations of our civilization, was kind of throttled because of the policies since 1950. Those have been released by our Prime Minister Narendra Modi ji. In the last decade, so much simplification has happened, so many of those constraints have been removed, that the entrepreneurial energy is coming forward. And that's what drives technology, that's what drives innovation. That's what gives me the confidence that the world will have a T3 configuration in which these 3 countries, India, China, and US, will be leading most of the technologies.
How long will it take for India to be competitive on all of those different levels with those other 2 countries, the United States and China?
Different technologies and different streams will have, of course, different time frames.
Trajectories.
I can say in case of semiconductors by 2031, 2032, in that time frame will be equivalent to what many of these countries are at today. And then it will be a race which will be a very fair and a level playing field. Similar things will happen in other technologies also.
Minister, conditions matter.
Yes.
Has the widening divide, or maybe deepening competition, another way of looking at it, between the United States and China, changed the calculus for India's ambitions, its opportunity in technology?
Our Prime Minister has always told us that we should strengthen our line, we should make our line longer, we should make ourselves more stronger, we should make sure that our capabilities increase rather than trying to reduce somebody else's capabilities. We don't think in...
You don't think in zero-sum terms?
Yeah, we think that we have made lots of contributions to the human society over last 5,000 years, and we as a civilization will continue to make those contributions. We should be able to strengthen our capabilities, further our capabilities going forward.
Most countries are forced to make a choice. Am I going to align myself with the United States? Am I going to align myself with China? For India, is there such a thing as digital non-alignment, digital sovereignty, if you like?
Digital sovereignty is a point that practically every country today thinks about.
Would like to have the luxury to think about?
More like ability to have control over your own future.
Yes.
In that sense. In a digital world, there are no boundaries, as we know. Internet doesn't follow the global geographic boundaries. Digital sovereignty is definitely important, but our policy has been, our foreign policy, as well as our technology policies of multi-alignment. Our policy has been that how do we contribute to the growth of technology and betterment of entire humanity through our contributions. That's the way we think.
in a world of, let's call it, weaponized supply chains, and that is the reality today, where at the moment, I'm not talking about 2031, but where at the moment does neutrality end and alignment begin? Where do you need to work with at least one of those two other regimes, whether it's semiconductors, artificial intelligence, 5G wireless, or the next 6G wireless, critical minerals? How do you think about that?
Today's supply chains are, I don't think they are in 0-1 state, right? Multiple players are there, multiple geographies, a small component, a chip which gets manufactured, that passes through so many boundaries by the time it gets its final finished shape. So we have to work with so many different countries and so many different partners. And that's where the factor of trust comes in. We believe that India is a trusted geography. It's a trusted country because we believe in IP rights. We very strongly protect IP. We believe in developing or rather co-developing solutions. I'll give you one example. End-to-end telecom stack for 4G and 5G. There were just about two companies from China, one from Samsung and two from Europe. Now we are the next country where we have developed the complete 4G and 5G telecom stack. And
with your own proprietary technology.
With our own proprietary technology, and we have given a level of sophistication which is better than the existing products. And that's possible only when we work with so many different partners. That's not possible working alone. You have to work with partners. That's the way technology works in my understanding.
Minister, I'd like to ask you about social media. As the minister, this minister, as you can see, has a very large portfolio. As the minister, both for information and broadcasting and also electronics and information technology, you are at the nexus, aren't you, of one of the most important debates in global governance, how to regulate social media.
Okay, we will just step out of the panel taking place, of course, right inside where we are with a spotlight on India, but we're not moving the spotlight from India as well because quite literally, next year, the New Economy Forum will be taking place in
India.
Yeah.
So we're heading off the baton soon, tomorrow, of course, as we move the NEF out of the Capella Hotel, which has been here for many years, to, of course, India. So very excited about that. At a time when we're seeing nifty markets, yeah, we're taking a look at that. Indian stocks actually are doing quite well, right?
200 points, give or take, from reaching that record high. I mean, we talked at length about this year, that this market has been lagging its peers.
Finally, it's coming back.
Right, coming back. Yeah. That's the peak, 200 points, and we'll see what happens, of course, when the market opens in the next hour of Bloomberg Television.
Yeah, we'll have more from New Economy Forum, hearing from senior executives, including the likes of NASDAQ, the Ashmore Group, and PIMCO in the next few hours. That's it for us here from the China Show. Insight with Haz is next.